Prepare to dive deep into the world of Tesla stock forecasts with commentary from analysts and industry professionals. Regarding Tesla's potential for future growth, the outlook appears optimistic. Longtime automotive specialist Sandy Munro claims that one little-known aspect of Tesla's amazing industry takeover plan has the potential to skyrocket the stock price to $1,000 per share by 2026, a forecast that many investors are closely following. But is the massive manufacturer of electric vehicles able to achieve this? We'll dissect the data and investigate the variables that could affect Tesla's growth trajectory in this video. So take a seat back, unwind, and let's see if Tesla can achieve its 2026 stock price target of $1,000 per share. First things first, though, make sure you subscribe to Wall Street Games and don't forget to hit the like button. Now let's get started. Sandy Munro believes that within 3 years, the price of a share of Tesla stock might reach $1,000. Given that I anticipate the share price to reach $1,400 by the end of 2023, the outlook is optimistic. So it would be like Christmas coming early if Tesla stock hits $1,000 per share by 2026. The stock is already trading in the lower 200s to higher 100s, indicating that 2022 is already gone, according to the Tesla stock price prediction chart for 2026. With almost 1.3 million car deliveries, the overall net income revenue was noteworthy, and the EPS was approximately $4.07. We predict considerably more growth between 2023 and 2026, with 1.858 million cars delivered in 2023 alone. Check out our video from the first quarter of 2023, where we break down the deliveries and production for the year to see how we arrived at this figure. Assuming a growth rate of 40% annually, we project that by 2026, there would be about 5.1 million vehicle deliveries with an average selling price of $50,000 in 2023, $51,000 in 2024 due to the Cybertruck, and $50,000 again in 2025. A tiny car that may be manufactured on a wider scale and sold for about $49,000 per unit might be introduced in 2026. Additionally, we computed each vehicle's operating margin, projecting it to be 14.5% in 2023. We anticipate a little improvement in the operating margin, reaching 16% to 17% to 18% by 2026, notwithstanding the possibility that recent price reductions will lower it to 13% to 12% in the up to double. Lastly, we took into account the credits and earnings from the vehicles together with the one-time cost for autonomous driving. It is anticipated that beginning in 2024, 2025, and 2026, this charge will rise by $2,000 annually. It is realistic to anticipate an annual increase moving ahead, as this charge was raised from $8,000 in 2020 to $15,000 in 2022. Although $1,000 per share by 2026 is a lofty goal, Sandy Munro's estimate is by no means unattainable. We can see how it's possible to accomplish this aim by taking into account the numbers and several elements that could affect Tesla's growth. Nevertheless, before making any investing selections, it's crucial to constantly conduct due diligence. We must examine the data in order to comprehend the prospective rise in Tesla's revenue. 1.858 million Tesla cars had been delivered as of 2023, and 279,000 of those owners had chosen to pay a one-time price of $2,000 per share increase for self-driving FSD. This corresponds to a 15% FSD opt-in rate. Nevertheless, we lack information regarding the number of clients who are paying the $200 monthly subscription charge. It is possible to determine the total revenue for FSD in vehicle sales, which will rise by 2% a year, using a conservative assumption of a 15% opt-in rate. By 2026, Tesla expects to have made between $12 and $15 billion in energy profits, with annual growth of around $450 in energy per. When currency charges are taken into account, the net income for each year approaches $1.5 billion, translating into total revenue over $100 billion. Earnings per share EPS is projected to be 4.92 cents in 2023 and will rise annually through 2026. There is cause for hope for 2024 with an operating margin of 16% and an expected earnings per share of 7.84 cents. There are a number of reasons to trust my forecast, despite the fact that some may find it unduly optimistic. First off, we might not be in a recession or bear market. Furthermore, economies of scale will continue to be advantageous for Tesla. After dissecting the fundamentals, the next step is to calculate the price per earnings PE ratio, which will yield the stock price. It is noteworthy that the number of outstanding shares of Tesla is decreasing annually by 2%. AP of 60 by the end of 2023 is probably realistic, meaning that the stock would be valued close to $1 trillion at $295 a share. In 2024, if it proves to be a prosperous year, we might witness even higher growth. Although Tesla has a large potential for revenue growth, it's crucial to take inflation, operating margin, and outstanding shares into account. Although there are good reasons to be positive about the future, it's crucial to maintain perspective and take all the factors into account. We point out that Tesla would have about $300 billion in total revenue and a net income of over $57 billion if its P/E ratio was 60. Although they admit that this seems absurd and crazy, they also point out that if Tesla keeps growing at a rate of at least 30%, it might actually happen. They contend that in order for Tesla to keep growing at this rate, it would require additional revenue streams, including as electricity. To make the P/E more reasonable, we think Tesla could boost car deliveries. They speculate that Sandy Munro's projection of $1,000 per share in the future might be based on calculations similar to this. We see that if Tesla's growth is 40%, 50%, or 60% overall, then something must be going on with the company. Despite realizing the difficulties that lie ahead, we are yet hopeful about Tesla's stock values in the future. Together, let's do some math and examine Tesla's development throughout time. About 500,000 Tesla vehicles were delivered in 2020, and Elon Musk announced that the company intends to grow at a 50% annual rate. Based on our calculations, they should have delivered about 750,000 automobiles in 2021. Nonetheless, they delivered 936,000 vehicles, or nearly a million of them. By 2022, if we apply an additional 50% growth rate, they ought to have delivered more than 1.1 million vehicles. However, they shipped 1.3 million cars. If we maintain a 50% growth rate, they should supply a little less than 1.7 million vehicles by 2023. But our prediction is that they will deliver over 1.8 million. Tesla intends to ship 1.8 million units cars in 2023, so this year will be difficult for them. However, we'll have to wait and see how they fare. With an additional 50% growth rate, they should supply slightly more than 2.6 million cars by 2024. Although we still estimate that they will produce roughly 100,000 more automobiles, the difference is narrowing. Looking even further ahead to 2025, we estimate that they will deliver 3.6 million automobiles, but if we maintain a 50% growth rate, they should produce about 3.8 million vehicles. By 2026, if we assume a 50% growth rate, they need to supply over 5.7 million vehicles. Now, let's substitute the stock price for these figures. In 2023, the stock would trade at $718 a share with a 60 P/E ratio after 3.789 million vehicles were delivered. By 2024, the stock price would have increased by 40% year over year to $1,114 a share with 5.683 million vehicles delivered. They require a 54 P/E ratio by 2026 in order to hit their target stock price of $1,000 per share. A 50 to 60 P/E ratio is doable given Tesla's anticipated growth, and if by then fully autonomous driving FSD is regulated and generally accessible, a 56 P/E ratio would be deemed inexpensive for the company. Every year, Tesla reduces the amount of shares outstanding by 2%, which may have long-term effects on the stock price. However, there's a chance of a buyback that would lower the number of outstanding shares and raise the stock price if Tesla makes between $50 and $60 billion by 2026. Long-term, Tesla has a bright future, despite the uncertainty surrounding the near term. In terms of energy, FSD and total renewable energy, no one compares to Tesla, therefore buying one is a smart move. The speaker is fully invested in Tesla stock and has faith in the company's future. Even though Munro is a well-known figure in the automotive sector and has a wealth of automotive knowledge, the speaker admits that Tesla's stock market value is not the same as the company's true worth. Fundamentals will eventually catch up with the stock, but it's hard to say when the market will recognize the discrepancy. Because of this, investing for the long term is crucial, and it's critical to avoid getting too sucked into the market's short-term swings. Our video for today comes to a close now. Remember to subscribe to the channel in order to receive future updates. We appreciate your time, and we'll see you in the upcoming video.